Hello and welcome to another episode of the Investor Financing Podcast. I'm your host, Beau Eckstein. We have a great guest today, Briscoe. He helps people invest in apartment buildings, and he's the director of Tribes of Titans, which is a multifamily educational company. He is a retired Marine. So first of all, thank you for your service. When I was younger, I thought about going into the military and I didn't do it. I didn't think I was cut out for it, quite frankly. But want to congratulate you for over around 20 years of service. So that's fantastic.
Yep. Hey, thanks a lot. And honestly, when I was in high school, the military was the furthest thing from my mind. I ended up going active duty right after September 11th, and that was the game changer for me. And I retired, 20 years in a month, 20 years and about 45 days after September 11th. So that's kind of that's what did it for me. It was kind of the call to action or call to arms for me. And I never intended when I signed up to go 20 years, but turns out that, I enjoyed it enough that I kept on doing it.
What did you do in the military? What was your position?
I had a lot of different types of positions. Most recently, I was working as what's called a foreign area officer, basically international affairs specialist. And I would work with, the countries that we like and we want to work with. So all of the friendly partner nations, allies, and whatnot. But yeah, so, and as part of that, during my career, I've lived and worked out of Rio and Mexico City, learned Spanish and Portuguese, and was able to use those skills to help further good relations with other countries. That's what I did most recently. I think for the bulk of my career, I was in a field called aviation command and control. Just imagine what an air traffic control facility does, and then take away a radar and, be in a place where people can shoot at you. And that's kind of what we did.
That's great. I'm actually trying to learn Spanish. I met my wife when I was traveling in Mexico, and she didn't speak English and I didn't speak Spanish. Yeah. For the first year of our relationship, it was Google Translate. And I've been working so much, it's hard to learn another language, I tell you, later in life. But it's my goal because half my family, and I got a huge Mexican family now, which I'm very proud of. But they don't speak any English, so it's a challenge, but it's a fun challenge to have. So
it is. And I mean, I learned really quickly that you're never going to learn in a classroom. You're never going to learn in an app. In a lot of ways, learning a language is like multifamily. You have to jump in and do it. There's no shortcuts. There's no apps. It's you just got to jump in, make mistakes, and do it. Keep on practicing and talking and listening, and pretty much immerse yourself to learn a new language. And anyway, similar to multifamily.
Yeah, let's talk about. So when did you decide to start looking into investing in real estate? At what point of your career? And then were you, I guess, obviously you're making acquisitions when you were working, and then once you retired, now you're full-time in the business. But what did that look like for you? When did you realize, hey, I need to do something when I retire, and this is what I want to do?
It was long before I retired. It was pretty early on. Around 2004, I read Rich Dad, Poor Dad, and I remember exactly where I was. And if I pulled out a calendar, I can actually pinpoint the date. But he talks a lot about, buying assets, and he actually talks a lot about multifamily. But at the time, I had this big limiting belief that, hey, commercial real estate sounds too difficult. And so I was stationed in Okinawa, Japan. So I felt that I couldn't start buying assets immediately. So what my plan was, and at this time, I had not decided that I would be a 20-year careerist. But what my plan was is every time I moved with the military, I would buy a house, and that's essentially what I started doing. Was just every couple of years, I'd move, I'd look at the market, I'd buy a house. And then when I move out of that place, I would turn it into a rental. So that was my plan. Over the next 15 years or so, I mean, I ended up having 3, so it wasn't like I had a huge portfolio. But what that did for me is it kind of gave me a proof of concept. It was, rents come in. I understood what expenses were, the turn times and things like that. And, market rates and whatnot. But we sold one of the properties, and netted, almost $150,000 on the sale. And so, when we started looking at that, it was just like, let's figure out how to do this more, and let's figure out how to do this at a bigger scale. And this time I was probably at my 15, 16 year mark. So it was a little more natural for me to look at retirement, so I'm thinking, okay, I'm going to be eligible to retire in 2021. And I knew that, for quite a while, but I was always fascinated with real estate. I really enjoyed it. I was the type of person that would, hop on the MLS and look at listings, right before going to bed every night and trying to, work through numbers and see what things would work. So, yeah, I really started looking at how can I turn real estate into a business that will support my family post-retirement. And eventually I landed on multifamily. I mean, at first I was trying to make the single family game work, but what I found, and once again, this is part of the limiting beliefs I had, what I found that it was going to take an awful long time to get enough single family properties to support my family. Right. But I stumbled on a book about multifamily, and all of a sudden, made a bunch of connections. And from there on out, it was, let's figure out how to start buying apartments. And that was really so the last 3 years of the military was, two purposes. Obviously I wanted to finish, as strong as possible, but also build a business up so that when I retired, I'd be able just to sidestep, and not have to worry about finding another job, just, go from a side hustle to full time.
That's awesome. And I think, if you're in the military or retired, you can take advantage of the VA home loan. And that's a fantastic program. Yeah. And I think it's important for people out there that are in the military or retired to utilize that. It's 100% financing. You can buy two duplexes or fourplexes potentially. And I like the concept. And I think that people need to get started. So I think it's oftentimes a lot of people should get started with small multifamily, like 2 to 4plexes, or even a single family property, because the power of home ownership, when you sold that property and netted 150 grand, you can't save that much money. It's pretty hard to save money. So I always tell people, whether you want to do big commercial deals or you just want to own a couple duplexes and fourplexes for additional cash flow. If you can leverage I like what you were doing, the owner occupied, and then you move out, you maybe take advantage of the VA loan when you could, and that kind of thing. It's a great way to leverage and build wealth kind of on a slower pace. And then oftentimes, as we interview people, I know you have a podcast, and the journey always leads to, well, I can get there faster and build. I'm going to need X amount of single family homes versus I could have one apartment building. And it often makes sense to start scaling your business that way. I still buy duplexes and fourplexes. I love them, but I also see, after interviewing tons of multifamily investors, that and financing their deals, because that's what I do for a living, is that, hey, I should be looking a little bit, further along, because when you have a retirement, but you probably looked at it like, I need to do something, right? I'm going to get X amount of money per month, but that's not nearly what the cost of living is going to be. So, what do I enjoy the most, and it's interesting, because you went from a really structured kind of job to really being your own boss. I think anybody listening, that's important too, because that was probably, you now can be more creative. You can do things your way. And I think in the military, and I've never been in the military, it's a little bit more structured, at least in the beginning of your career. And so now that you have your own business, how do you like having your own business and making decisions and different things, like being as creative as you want?
Here's the thing about the military is large organizations have to have systems and structures. And it doesn't matter if it's military or what, but to grow and to scale, you have to have those systems and structures. And, at first I think I was kind of freewheeling it, and, it didn't take very long for me to realize that I had to create similar systems and structures in the business that we had in the military. And, everything we did, there was a system to it. How we did our, morning report, our accountability every morning, who shows up for work, how we did basically every single thing inside the military was attached to a system, which, is the secret to running large organizations. So yeah, at first it was, I'm going to do what I want when I want, and I'm going to, slowly, or fast grow this thing. And like I said, I realized really quickly that we had to put the systems in, and we had to be able to systematize what we did, or we'd never be able to grow to a certain point. So yeah, it was kind of interesting, kind of how things progressed, because, at first I was trying to get out of the system. And, once I got out of the system and started doing stuff, I realized the importance of the systems, so right now my focus is building the system around, building my business around the system. And, when I bring employees in, I've got a couple right now, but when I bring more employees in, it's just a matter of teaching them the system and letting them operate inside the system.
Yeah, I'm definitely wasn't a systems guy, but you learn the importance of systems. It makes your life way easier.
Yeah.
And even just being like consistent. Right? The military teaches you to be consistent too. And like you just probably routinely wake up pretty early and things like that. And these are all the traits that you for business that you need.
Yeah.
And that's a very important fact.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau Eckstein here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. Why don't you kind of fast forward now and talk about the Tribe of Titans? What was the thought process of creating that, and then who are the members in this community, and what would you expect if you go into this community? I believe it's a platform where you can go in. It's almost like a really advanced Facebook group, almost to a certain extent.
It's kind of a mixture of, a Facebook group and, an educational platform. We use Mighty Networks, which is a community host. But, we've got a lot of educational resources in there. We've got videos, we've got, written content. But, how it came about, I've always enjoyed teaching people. I've always enjoyed helping other people. And when we started syndicating multifamily, I was finding that I was enjoying the conversations more with people who were asking me, how can I do what you've done, than I was enjoying with the investors, and my job was to go out and find money to be able to do more apartment deals. And so I was supposed to be talking to investors all the time. But like I said, I found that I enjoyed talking to the people who wanted to do what we were doing more. And so that was the genesis of the Tribe of Titans. The podcast that we started is aimed at helping aspiring investors, learn about the business and get their first apartment complex or first deal done. So naturally, it just kind of led to, how can I help more people? How can I do this more consistently and systematize it, is basically what it is, and I found that I was asking and answering the same questions over and over and over again. And so, for our podcast, when I'd get asked a question for the second or third time, I would write up, an episode, and that would be, one of my weekly podcast episodes was, hey, I've gotten this question 4 times from aspiring investors in the last month. So here is my answer. And pretty soon all that, I started creating the content and then organizing the content. And that's what really started the Tribe of Titans. Was I realized I was answering the same questions over and over and over again. And incidentally, I just realized yesterday I had a buddy call me up and say, hey, I'm starting a podcast of my own. So I just put on my to-do list, write a course on starting a podcast, because that's another question that I've answered over and over and over again. So really, it was just a matter of, I enjoy the conversations where, people are asking me how to do things. I think I do a fair job at explaining things that the way people can understand. And since I was being asked over and over again, it didn't take a lot to just, write down all my thoughts each time and organize it and then turn it into a course inside the Tribe of Titans. So, what does it look like on the inside? Last I checked, which was earlier this week, we had 170, members of the Tribe of Titans. Most of them are looking for their first deal, but we've got, I'd say probably 25% have done one or more apartment syndications. A lot of fix and flippers in there, a lot of single family investors that are looking to scale up. We have networking events. We have some live educational events. We have guest speakers come in, and then a lot of content. And then a lot of the, just like a Facebook group, you've got this, feed or board where you can ask questions or comment on people's stuff. So anyway, I think it's just a really, I love the Mighty Networks platform. And, we're pushing to make the group more and more valuable for the members.
And going back to that, when you were transitioning and you had the thought that, hey, I need to maybe look at this multifamily, you started educating yourself in this space. And then I'm seeing it more and more. It's common on these bigger deals, right? Especially your first couple to really kind of join as a co-GP as opposed to running the show yourself. What was your thought process? Like, I think a lot of people that are listening or watching this, they're intimidated by the big numbers. They're intimidated by I don't feel comfortable, because there's 100 units and I've only bought duplexes and fourplexes. I want to maybe strategically partner with somebody who's got a little bit more experience. Was that kind of your thought process when you went into your first deal?
I think there's a couple of ways of doing it, but if your goal is to get into the 100+ units, the fastest way to get there is to do exactly what you said, where you partner with somebody with more experience, and you have to bring some value to the table, right? So you have to be able to, hone your skills to the point to where you can bring value to somebody who's capable of knocking down a 100-unit apartment complex. That's the fastest way to get there. And, it's something that, most people end up having to do getting to that space is to partner up because, something that a lot of people don't talk about. If you want to get a commercial loan, you have to have experience, you have to have net worth, and you have to have a whole list of stuff, a certain amount of liquidity, a couple $100,000 to, a couple $1 million on some of these properties. You have to have liquid. And a lot of people trying to get into the game don't have the net worth, don't have the experience, and don't have the liquidity. And so you have to partner, so the other way to get there is, to buy a duplex and then, a year later, a fourplex, and then, maybe sell those and buy an eightplex or refinance and buy an eightplex and slowly work your way up. But the fastest way to get there is to co-GP, to find a team that you can partner with. And I've come full circle now to where on our first deal, we had to bring in somebody experienced into our deal. Talked with him for about an hour yesterday. So he's still very much, involved, but I've been very much a mentor of mine for, 3 or 4 years now, but come to the point now to where now we are, lending our balance sheet and we are lending, our liquidity and our experience to other people. And we're coming in as co-GPs on people who want to get their first deal a lot. So, it's nice to come full circle and to be able to, give people the help that we received on the front end as well and kind of pay it forward.
That's great. Who was your biggest mentor when you were getting started in multifamily, would you say?
I would say 2 people, Josh Eidingen and Drew Whitson were probably the 2 biggest mentors I had. And both were coaches in the Michael Blanc program. Josh was my coach, and Drew has just been somebody that has answered the phone every time I've called, so those are the 2 people that I think have been most influential and been the best mentors for me in multifamily.
And obviously multifamily is ultra competitive in that space right now. Where were some of the assets you bought, like states, and where's your focus right now looking for new deals?
So right now, I mentioned I'm GP on 10 properties. 8 of the properties are South Carolina, 2 are Georgia. So that's where we've operated. And when I retired, 6 months ago, I moved from, East Coast to Idaho Falls. And so now I'm starting to look at, other ways of doing things, so, with all the networking that I do, I have a lot of people who have asked me to partner with them in the past. And with the company I was involved with, we were exclusive all or nothing. So, right now I'm looking at finding a way to partner with more people. And I've got my roadmap ahead of me. I'm going to start a fund, which, helps, which will be a vehicle for me to be able to partner with a lot of people. It'll be a vehicle for me to be able to bring capital to other people's deals. And for the people who invest with us, it's going to be a fund with a lot of different assets. And so, one thing I've noticed with our portfolio of 10 is we have some properties that are, super strong on cash flow, some properties that aren't. We have some properties that are, crushing it with, the amount of equity and forced appreciation we've put in, and some properties that aren't. And it's usually they fall in one category or the other, so, creating the fund, I think is going to help the investors to get the best of both worlds at a lower risk point. So anyway, that's I think what's coming next for me is to keep on doing what I'm doing, be able to explore different markets. I think a lot of Texas markets have a lot of growth ahead of them. I'm looking at a couple of Nevada markets. I mean, you're in Vegas, not so hot on Vegas, but I'm pretty hot on Reno right now. So the world's smallest big city, or biggest small city, I think is what they call that. But
I used to live, years ago, I lived in Reno, and so they have that. They built the Tahoe Industrial Park, and there's huge companies, all like these like Twitch, or a lot of huge companies. Just it's amazing. Yeah, that's a great area too. I know the single family space, like a lot of other places, we've seen so much appreciation.
Yeah.
Rates are moving up, so kind of like kind of moving the conversation forward.
Yeah,
rates are moving up. We've got a war going on. We've got inflation. We've coming out of COVID. We still have COVID, but it's slowing down, and that's great. Great news that people are going back to work and things. But our economy is kind of in a weird space right now.
Yeah.
There's still like very low inventory on the market. It's going to be interesting, kind of seeing like what is going to happen. My thought process is, listen, there's such a shortage of inventory, and there's such demand for rental property right now. I don't really see, there's like these boom and bust people out there. Oh, we're going to crash 20%. That's that. Mm-hmm. But the fundamentals to me show that the real estate market at least is strong, and there's a huge demand. And even if rates go up a lot, people are still going to be buying, maybe not at the same level. What are your kind of thoughts going forward? I mean, I know we have to be more careful. I like the idea of your mutual. I'm calling it a mutual fund because it's like you're buying, you're putting different assets. You're diversifying your risk levels and sharing in the gain. So your blended return should be good.
It is actually the same thing, the exact same concept as a mutual fund, and it's, the same laws that allow mutual funds to form or what allow us to do the funds in multifamily. But so there's a couple of things. There's a huge supply and demand imbalance. The only caveat that I would put onto what you said is if prices for rentals continue to go up faster than wage growth, I think the demand is going to falter. I think people are just going to start, living with their parents or not moving out on their own type stuff. So, I think there are a lot of areas that are growing fast, and there's a lot of areas where people want to move to, and going back to Reno, I think a lot of the Silicon Valley companies are relocating. I mean, Tesla has their gigafactory there. Apple's got a facility. I mean, Amazon's got a facility everywhere. You mentioned Twitch, but there's a lot of large companies that are moving, from the Silicon Valley area into Reno. It's like the first city when you cross the border on I-80. And so there's a lot of growth from the Bay Area happening there. And to kind of answer your question with one city as an example, people are moving and they're going to Reno because, it's a better environment for businesses. So businesses are moving there. People are moving there because it's less expensive. It's a lot less expensive than the Bay Area. And you still have proximity to everything you had in the Bay Area. So you kind of look at what's going on. The dynamics in Reno specifically is, people are moving from high cost of living to low cost of living, so Bay Area to Reno. Businesses are moving from, the less business friendly states to more business friendly states, California to Nevada again. So you see all these dynamics where, there's going to be a supply and demand imbalance. And those are the places where I think you have the most opportunity for growth. So places like Reno, when you buy something, you're not going to cash flow, and you're banking on, the market in Reno to continue to appreciate. And like I said, it's a growth market, but on the flip side, you have markets like Columbus, Ohio, where you can still get, properties at cash flow day one, and the appreciation is not going to be as strong or as sharp. But, going back to this idea of putting a fund together, you put one Reno property in with one Columbus, Ohio, or Dallas, Texas property, and you get a little bit of everything. You get the growth, you get the income, and you're able to lower your risk because you're diversifying over several properties.
Yeah, and it's funny you were talking about the Bay Area. I lived in the Bay Area. That's where I grew up. I grew up in Walnut Creek, right outside of San Francisco, a little bubble there in Walnut Creek. And when I had a second home in Las Vegas for a long time, in the 2005 or 2007, I actually lived in Reno, but I always knew I was going to live in Nevada. I kept on going back and forth. Where do I want to live? And then, so 2.5 years ago, I moved here full time to Las Vegas, actually Henderson. And just what you were saying is so true. I looked at it, I go, listen, I can work out of my house. I can, the difference is the house I bought here in Henderson for $400,000. It's worth more now, but at that point, the same house in Walnut Creek was 1.4 million. So it's kind of a no-brainer. Plus, there's no state tax. Everything's cheaper. The only thing that costs more that I found here in Nevada, or at least in Las Vegas, is car insurance, because it's a 24/7 city. But I'm super happy I moved here. I can tell you, my parents relocated here. There's construction going on everywhere. I know Reno's the same, and I did live in Reno. And I've been pro Nevada for a long time. I kind of got here a little bit too early, which was 2000. I started buying in 2005, and obviously everybody knows what happened in 2007 and 8. But it is a great market, and I understand your thought process, because I think the same thing, that there's interesting dynamics going on right now, and people are moving. So anyways, that was great points that you brought out. Where can people follow you or find out more information? Where would you want to send them to?
Best place to follow me is LinkedIn. Excuse me. But best place to follow is LinkedIn. I'm on LinkedIn, almost on a daily basis. Shoot me a message on LinkedIn, and, I'm pretty good at responding there. And then if you're interested in the Tribe of Titans, the website is thetribeoftitans.info, INFO, so those are the best places to reach out. And then, if you're interested in anything, if you really want my time, join the Tribe of Titans. We give everybody 30 days free, right? So if you go to that thetribeoftitans.info website, you go down, you select the plan. There's only one plan available, and it's a 30-day free, and then it's a small subscription afterwards. But if you really want my time, I'll answer any question inside the Tribe of Titans. I'm in there most of the day. Between Tribe of Titans and LinkedIn, I'm probably spending 6 hours a day, but maybe that's too much. But so LinkedIn, if you want to connect and follow, and then Tribe of Titans if you really want to take action and move forward.
Perfect. Well, Brian, this has been a real pleasure. I loved hearing your journey, and I'm going to get you a copy of this episode once it's edited, And I appreciate your time and look forward to following your journey as well.
All right. Hey, thanks a lot, Beau. I appreciate your time too.
All right.